Hey everybody, Tom Lenfesti and Lauren Maxey here with you today. As part of our daily counsel, we've talked a lot about the SBA funding, through the EDL loans, the different grants available, the Paycheck Protection Program. But the CARES Act also had a certain number of provisions for individuals and businesses regarding tax benefits. And, some of those are very much known based on, stimulus checks that are hopefully hitting certain people's bank accounts otherwise, but others you may see in your 2019 taxes. And it's important that if you prepare your own tax returns or if you have an accountant or other preparer do that they're aware of these potential changes that really could have a great impact or savings to you, or just maybe good opportunities to kind of take advantage of. So with that, we're going to try to walk through and just do a quick summary of those provisions, kind of the key ones. And Lauren, what can you tell us about the key ones for individuals under the CARES Act?
Yeah, absolutely. Thanks, Tom. And there are, again, some great resources out there to be aware of that can be capitalized on to really help during these times. One of the most common ones that a lot of people are familiar with is the $1,200 recovery rebate that a lot of individuals will be seeing. And that is, again, $1,200 for individuals, $2,400 for people that are married filing jointly. And that is something that's automatically provided, but it does begin phasing out if your income is above a certain level. I believe it's $75,000 for an individual, and different if you're $150,000 if you're married filing jointly. So being aware that that is out there, it is something that should automatically happen. It's getting processed based on your 2019 tax returns. So something to talk with your CPA about, but that should be coming through for a lot of individuals. The timing of that processing has been kind of a little slower than a lot of people would like, but that is a resource that is coming to a lot of individuals. Another great opportunity resource that is out there is they are waiving the early withdrawal penalties from a lot of the retirement accounts. So there's typically a 10% early withdrawal penalty that is being waived if it's considered for coronavirus related reasons. And so as that may be something, if you're looking at, I need to tap into my retirement account, one, making sure that it's for that qualified reason, talking with your advisors on that, but that is a potential resource as well. They're also waiving the required minimum distributions, those RMDs that once you're over, now it's 72, that a lot of individuals have to take. So being aware of that, you may just not want to take it this year, you may want to take it. So it's giving people a little more flexibility with their retirement accounts. Another great kind of tool that's been implemented that they're encouraging people to give charitably. They're encouraging companies to give charitably. So those kind of deductions always have certain limitations, but like corporations are now incentivized to give more. Limits on contributions of food inventory items have been increased. Again, it's all about encouraging people to give more during this time, making cash donations and those deductions that are available there. So if you are charitably inclined and it does make sense from a tax perspective, chat with your CPA, talk about how you can maximize on your giving in an effective manner there, helping out others during this time. Last but not least, for a lot of individuals, there are some exclusions for student loan repayment options. So a lot of individuals are aware that some payments have been deferred. So checking with whoever is managing your student loans, they most often on those websites have big, bold notices on the front page there of just, hey, we're going to let you defer payments for this long. A lot of individuals are taking advantage of that and trying to pay down principal during this time because the payments just go right to principal for a lot of individuals. And then employees can also kind of, if their employer is helping pay for some student loans, repayments can kind of be excluded from what is considered taxable income for that employee. So just looking at different options, how to, again, help individuals during this time with their taxable income, trying to keep things flowing for individuals and making it easier. But that's just from a high level. Again, always checking with your CPA about, hey, I want to give back a little more. How do I do that more efficiently? Hey, I've got student loans. What can I do there? Chatting with CPA and making sure we're all on the same page there.
Yeah, thanks, Lauren. I think that's a great overview. And one of the challenges that I've really started to hear, of course, is, the IRS has tried to release quick guidance for tax preparers, CPAs on the individual side, on the business side, which I'll touch on next. But again, some of them, depending on, does their software update that quick? What are they doing? Anything else they may not know. So yeah. I know, like the annual calls we have, with the CPAs for clients, everything else, it just helps make sure that there's open communication, those different elements. So if you haven't talked with your CPA or tax preparer about these, it's a great time to do so, just to make sure. None of these may apply. You may not want to take advantage of any of them on the individual side. And the same goes really for the business side. So I'll just give a quick overview, again, of the business side of things under the CARES Act. The first and foremost, two different provisions really focused on helping business owners keep employees employed. So if you go with the payroll protection program, or paycheck protection program under the SBA, these may not apply for you. But if you haven't sought those funds, if you're ineligible for those funds at all, there's one that allows you to defer any employee Social Security match that you essentially, as the employer, typically withhold around 6.5% or your portion of that, and basically defer it. So if you don't want to withhold that match for 2020, you can use that for cash flow needs otherwise, and you defer it. 50% has to be paid in 2021, 50% in 2022. So again, keeping people employed, you haven't sought funds under the payroll protection, you can defer those employee, portion that you would withhold as an employer typically. So helps cash flow, could benefit you depending on that situation. As well, there's an employee retention credit if you employ and keep those people employed. If your business has been harmed, it's another way, instead of going the SBA route for paycheck protection, or the EIDL loans, essentially you can go this route, which may apply to give you a tax credit for keeping employees employed during a harmed time or a crisis time. So definitely look at that employee retention credit. A big one for a lot of businesses, depending on your situation, is net operating loss. Typically, under the recent tax reform that happened a year or so ago, they switched it to you could really just carry forward net operating loss. So you couldn't go backwards with it. So you kind of maxed out and kind of rolled any losses forward. If you were in a startup, if you had substantial losses from investments, anything else, those flow through onto your tax return, whether they're a corporate or your individual side of things. Now they've come and said you can actually go back. You can use those on your 2019. You can also go back to 2018 and amend that return. That can be an easy way to, one, help you on 2019 income tax that may be payable, or get you a refund potentially. So that's quick. If it applies under your situation, definitely ask about net operating loss carry back, not just carry forward. Under those same lines, under tax reform, business interest had been capped at a certain amount. That has been increased. So one is, of course, a lot of businesses will accrue more debt, potentially more interest right now with getting loans, everything else. So that will be more favorable going forward. But also look at your 2019 filing to make sure that that's not going to help you under kind of an increased deduction, right? So if you were a business that had essentially just based on buying supplies, lines of credit, production, whatever the case was, you had substantial loans, startup loans, otherwise, you may have capped out and not been able to take as much of a deduction for it. This may now allow you to take a larger deduction, have more savings, or potentially a refund on taxes. So look at the business interest. The other key one, there's others, but the other key one that I want to touch on is just bonus depreciation based on qualified improvement property. Usually this is upfits, tenant improvements, those type of things you may have done to commercial space. You may have not been able to depreciate those or accelerate the depreciation. CARES Act has kind of corrected really a mistake under the tax reform to allow you to accelerate that. That could have a huge impact if, again, your situation plays out. Again, quick hit on those items. They may or may not apply. They may or may not help. But overall, I think it is important to know those, right? The key element is to look to your situation, talk to your tax preparer, CPA. If you have questions, we're definitely communicating with clients and their CPAs and tax preparer based on these items. So if they have questions, you know, based on level understanding, different things like that, we're happy to help as well. Anything else to add, Lauren, to kind of the tax provisions under the CARES Act?
No, I think that's it.
All right. Well, we'll close it there as a quick overview and summary. Again, if you have questions on these, let us know. Go to your tax preparer, CPA, but hopefully there's some benefits there for you, and every little bit can help at this time. Thanks so much. We'll see you tomorrow.